Hi guys, welcome to Chapter 8 video. We are dealing with employees and payroll. And for this chapter, you of course are going to watch this video. And back in the forum, here we have Chapter 8 cheat sheet. Okay, so you have the same groups as last time, and you'll be creating a post in your group by Wednesday and then following up on that post by Friday. So you'll see this is due Friday at midnight. So you follow up and comment to each person in your group by Friday. Now, the two things you're going to post is your cheat sheet, which I'm going to be showing you kind of some more details that are missing from the chapter that will really help this concept of payroll makes sense. And then the second thing you're going to do is you're going to analyze your pay stub or any pay stub. Maybe you have a spouse or maybe a child that you can look at that you want to understand. And if you don't have a pay stub or you don't want to use one of your own pay stubs, you can use an example that's in the book. There's some different paycheck information in the book, and you can use that. So that's the other part that you're going to do in your post is just analyze a pay stub by doing out the actual calculations to show what the amounts are. Like, what is the calculation for each amount? And I'll add that in here as a sentence. I just said, see this explanation for more details, but that's what I mean by analyze a pay stub is like show the calculation for each amount on that paycheck. And explain it, right? So you understand it. So then when you come back and comment on each by Friday, just the same rules that have applied all through the semester. I didn't type them out this time, but use complete sentences, give a thoughtful post to each person, okay? All right, so now jumping in, basically with QuickBooks, there's going to be now an employee center, just like the other centers we had, only there's actually quite a bit more in the employee center because now we have time and we'll have paychecks. All of that can be tracked in here. When you add a new employee, you have to have them fill out forms like W-4 and I-9, which is that they can work in the US. W-4 is what's used to estimate your income tax estimates, and most states that have income tax have one as well. So Hawaii has a W-4, very similar to federal's W-4. So before we go deeper into kind of how you'll start doing things in QuickBooks, because QuickBooks kind of takes this perspective of this is how we enter it. And you can see working with an outside payroll service. So oftentimes you just hire an outside payroll service to do payroll for your employees. And even if you only have a few employees, it can be a great option because there is a lot of payroll's taken very seriously. You are withholding someone's pay and you owe it to the government on their behalf. So that means if you make a mistake, or a business owner, right, makes a small mistake, you're actually stealing from two people, the government and the employee. So it's taken really seriously. It's quite complicated. There's a lot of rules. We have an entire course at LCC on payroll taxes. So it's something to be aware of, right? Using an outside service makes sense because they specialize in that. They're not that expensive and they are experts in that area. So it's something that I encourage, especially small businesses, to do if you're going to have employees and you're going to be paying them. So there are multiple ways to handle things in QuickBooks. In this case, when an outside payroll service handles things for you, you just need to catch QuickBooks up. Alternatively, QuickBooks has a feature to allow you to run your own payroll run payroll kind of means run it for a period and cut the checks to the employees. So this is going to be a more complicated option where you're actually setting it up to run in QuickBooks versus when you use an outside payroll service, they take care of all of the liabilities and you're just cutting the check to the employee. Sometimes they can even cut the checks directly from your bank account. And in that case, you're still just entering the check in QuickBooks so that it matches what the payroll company is doing, right? You're just making QuickBooks match in the overall accounts. So here they get into payroll deductions. And this is kind of talking about other types of expenses and all the different taxes. And so this is what I want to break out in a bit more of a meaningful way. You can kind of see it here, but I think it's a little confusing. So I'm going to break out all these different taxes so that you can put them on your cheat sheet separately. And then, of course, you'll create the paycheck, talking a little more about the liabilities, errors, and then processing at the end of the year the different forms that are filed and that sort of thing. So here's the cheat sheet. And this is really, I'm going to take a step back and talk about payroll taxes so that you have a little more information to know what you're doing in QuickBooks. So first, there's two types of payroll taxes when you're paying someone. There's the employer's taxes. Oh, this is backwards. Employees' taxes and the employer's taxes. Now, the employee pays out of their pay, right? They pay out of the money they receive 6.2% of Social Security tax. And then they pay 1.45% of Medicare tax. Now, the Social Security tax, this is a regressive tax because it's only on the first around $120,000 of income that you earn. After that, there's zero Social Security. Now, as you can see over here, the employer pays the exact same amounts. So they pay Social Security of 6.2% and Medicare of 1.45%. Now, the employer pays this out of their own earnings and profits from their own money. So this doesn't actually affect what the employee does. However, when an outside payroll service handles this, they often do it all at once. So it's all being handled in the journal entries and the adjustments that you make in QuickBooks. So then there's some other things that come into play as well. And that's what we saw on that last screen that had the percentages. So in the employee's pay, out of their actual amounts that they're paid, they subtract Social Security tax, they subtract Medicare tax. So when I say analyze a pay stub, you're going to actually take the amount you were paid, so $10 an hour times 10 hours, that's $100, times 6.2%, so that would be $6.20. That's Social Security. $100 times 1.45%, that's Medicare. Then there's two other main amounts that come out of the amount that the employee is paid. These are both income taxes, but unlike Medicare and Social Security, these are estimated taxes, right? So when you do your taxes come April 15th, you actually figure out the amount of income tax that is due, and that's why you have a refund or an amount due, because the amounts that are withheld from your paycheck are just estimates. So there's federal income tax, and then in Hawaii and in many states, there's state income tax. These amounts are based on what are called withholding tables. So when you use an outside payroll company, this is one of the things that they're calculating, and they calculate this based on that W-4 form that you have someone fill out when you hire them. The higher the number of exemptions, the less money is withheld. If you have 0 on your W-4, which is practically the only thing that's reported on it, then you have the most taxes withheld. So that's kind of it for the employee side. Then on the employer side, they also pay insurance, workers' comp, and unemployment. And they can have federal and state versions. They tend to be very reasonable and smaller amounts. They'll pay workers' comp every month based on the amount that they pay the employee. And unemployment is basically based on the first amount that the person makes instead of like the entire pay that they receive. Okay, now just to point out here, self-employment taxes are kind of have a deceiving name. They are actually just Social Security combined, that's 6.2%, and the 6.2%, and then the 1.45 and the 1.45. When you're self-employed, you pay them all, right? And so that's where those self-employment taxes come. So I just wanted to point that out. And then we'll look at the journal entries next as we go into QuickBooks. But so definitely try to take a look at a pay stub, and just to make sure you understand everything on there. And if you don't understand any of the numbers, you want to ask about any of the numbers, do that in your group. The last thing we're going to do is look at the journal entries. And I'll show you where those, when you create paychecks in QuickBooks, they have some examples. So this is, here are journal entries. Let's see. It's just there. So working with an outside payroll company, this was this first section. So down here, they have a list. This is average guy designs, monthly payroll. And so you can use one of these and to recalculate those amounts that I mentioned and do out the calculation in your post. Just say whose pay stub you're using and do the amounts. But it's a good time to also look at your own. Now, you might have noticed I've passed this a few times where it says gross wages and payroll liabilities. Let's look at a pay stub. So this shows the total pay, payroll liabilities, and then the employees getting the net amount. So these taxes, and this could be another one you could check, right? Like, what are these payroll liabilities? Well, they're going to be 6.2% and then 1.45%. That's going to be your payroll liabilities. Now that kind of looks like a small amount to me. That could also include, of course, income taxes. And then those different payroll liabilities are going to need to be broken out by different accounts. So that's why you can use one account if a payroll company is taking care of things in more detail for you. And then when QuickBooks does it in the next sections where you do a lot more stuff, they're going to keep track of every little account because you're not using an outside service. So these entries here I did over here to kind of show you the entries. So first, let's say that we pay someone $10 an hour for 10 hours. we're going to debit wage expense for $100, right? And then we're going to calculate their payroll liabilities. Now, I didn't actually calculate them, but if we took 7.65, which is the total of this and this, Social Security and Medicare, times this, it would be 7.65, which we probably should use the right amount. Then, because we're withholding that amount for their taxes for them, and remember, we would probably withhold more for federal and state income tax, right? So let's say 1765. So down here we have 100. So the actual cash that we're going to pay them is only 82.35. I think I did that math right. So they get their pay minus Social Security and Medicare 7.65%, and then an estimate for federal and state taxes. So I used $10. Now, then the company taxes are going to be the same amount, right? 7.65. And the payroll liabilities without the withholding would be 7.65. And then we would cut a check to the FICA for these taxes for the total, which would be 15.3, I think. Yes, 15.3. And then that extra $10 would be handled in another entry. But I just wanted to go over these so you can see here you're recording the liability for the amount that you didn't pay them because you have to pay it to someone, right? You're obligated to pay it to someone. You recorded the full expense and then you put those taxes in a liability account, and then as you pay those taxes to the relevant government organization, you debit the liability, which reduces it, right? Okay, so that's all, just doing an overview. I hope that really helps, makes sense when you're going through these two options. The outside payroll service is keeping track of the detail in this one. And so you're just recording QuickBooks to match the overall accounts. And then when you set up QuickBooks to run payroll, you're going to be recording everything in a much more detailed level. Okay, guys, your assignments are all posted. Let me know if you have any questions. Be sure to make your post by Wednesday and then comment by Friday. Okay, see you next time. Bye.